this year in particular, if you think back what's happened over the last couple of years around catastrophe risk, it's a key challenge for clients globally, but in APAC in general. We've had 3 years of La Nina, so that's had a big drive in terms of seeing some of the flood losses that we've had, particularly in Australia, and we've had a few in Asia, and severe typhoons. So that obviously presents a challenge for our clients. So we work closely with them to help them understand their view of risk and be able to manage those events as and when they occur.
Following on just from the reinsurance perspective, big concerns around the availability of capacity in the market, and importantly the cost of that capacity and how that has an economic impact onto the underlying business and how that cost can be transferred onto the original business within an organisation. So I think that our clients really have to start planning much earlier now, and just have a true understanding of the market environment, not only in a localised market, but from a global perspective as well, which is impacting all countries.
Yeah, so when we're thinking about view of risk, what we're looking at is how well a company understands and takes on board catastrophe risk, and how well they build that into their effective decision-making process. Now, we've had catastrophe models have been in place for a number of decades, and the catastrophe modelling process has been used to help clients understand, mitigate, and also efficiently transfer risk during that time. And the industry has been well versed in catastrophe management and catastrophe modelling. But it can be, you can get over complacent and over reliant on these models. So what we're looking to do is really help clients, making sure that those models are used in the right way and they really are reflecting their own portfolios through a view of risk process.
Yes, it's important for clients to have their own view of risk and have the knowledge and understanding of their cat management in-house. But importantly, it supports conversations internally and with external stakeholders. So when it comes to reinsurance purchasing, it really helps to support the reinsurance strategies with regards to structure, cost or cover, but also potentially removed any cost efficiencies and any volatility from the independent model change as the models develop. But also it's important that the business units are aligned, and it creates a strong risk culture internally, so the underwriting and the reinsurance segments and their strategies are both aligned.
Yeah, so going through the view of risk process is quite complex and does require in-depth knowledge of the models and the catastrophe perils that the models are looking at. And in this part of the world, we have one of the most volatile regions, the most active region in terms of tropical cyclones, also in terms of earthquake. And we have the most complex exposure in the sense of urban centres which are prone to flood. So we look to help our clients develop their own view of risk through a number of 4 key areas. One is around people. So we invest significantly into specialists who understand these perils and work closely with our teams to dig into the catastrophe models and really understand the benefits and the pros and cons of those models and how they can be aligned with their business. We also invest into data where it helps to augment the process for catastrophe modelling. We also have our own impact forecasting modelling company, which brings an alternative view of risk, particularly in Asia. And we also invest into research partners and work collaboratively with different organisations within the region. And to give you a couple of examples, we have a working relationship with Columbia University and Kyoto University out of Japan on tropical cyclones or typhoons. And we've recently started a climate advisory council in Australia to bring together key leaders in the area of climate change.
Yeah, that's a good question. I think it's really important for clients to have their own independent view of risk to support, importantly, differentiate themselves from their peers, but also to support any conversations that they're having with any internal or external stakeholders. So in the eyes of reinsurers, for example, being able to demonstrate a strong understanding of the portfolio to ensure that both parties' view are aligned. And this is backed up by model and modelled output. For the regulator, for example, being able to clearly articulate the minimum requirements are met with regards to reinsurance and why a particular approach is used. But similarly, in conversations with rating agency, a key component of the assessment process is having a strong understanding of your cat management or your cat exposures. And it, again, internally for across the business units, whether it be underwriting and reinsurance, is to ensure that your both long-term strategies are aligned and prevent any unexpected discrepancies.
Yeah, so impact forecasting is Aon's internal catastrophe modelling development group. It plays a key role. It's been in play for over 25 years globally in terms of developing catastrophe models, and particularly in niche areas where the modelling or existing models that are available perhaps are of poorer quality. We have over 125 models across 80 countries and 12 perils, and the team are all localised. So we have people in region looking at not only the underlying research, but also working closely with clients to help develop their own view of risk using these models. Now, impact forecasting also has a transparent platform called Elements, and that can be used for clients to help take that in-house and develop their own view of risk using this platform.
Impact forecasting provides an alternative view in the Asian environment, which historically has been well received given that perils are not always modelled locally. But importantly also the transparent approach that the impact forecasting team promotes, and they're able to have in-depth conversations with clients if they're keen to look into the various components of the model and the underlying perils.
Yeah, so climate change has particularly become a key issue globally, and obviously locally we're seeing regulators starting to ask clients in-depth questions around how they build climate change into their business and how it may flow on and impact their business. Now, one of the challenges with climate change is it brings a lot of uncertainty to the picture. So it's important for clients to make sure that they have a sound understanding of their current day view of risk before they start to think about how they adjust that going forward in terms of climate change.
Inflation itself is an external environmental factor that each of our cedents need to take into consideration, whether it be the supply and demand challenges or the cost of labour challenges. And it's important for our cedents to be able to have their own view and articulate that to their various stakeholders who may not be familiar with the local environments and the impact into each of the Asian territories. We're working with clients who have developed their own indexation methodology, for example, to be able to then have their own view on whether it would be coverage or the underlying rates or underlying sum insured values that they can then include within their underwriting practices. So I think it's important for clients to be able to clearly demonstrate and differentiate themselves by articulating their own view of risk, but also sharing as much knowledge and understanding as they can with the reinsurance with their reinsurance partners. It brings both views, it ensures that both parties are on the same page, their views are aligned, and it also just transparency across the business units. It's a real partnership as opposed to just capacity providers.
Yeah, I think it's important that clients look to differentiate themselves and think about what's important for them in terms of both their business and the local context that they operate in, and really bring that to the fore as part of the placement process. With data they can use, or even just with discussions. That'll be the key, is to see how they can differentiate themselves. Yeah, I think the thing to remember, particularly in regards to climate change, that climate change has been in place for a while, and it's going to obviously continue to be there, and it's a long-term view. What we've seen in the recent times can also be associated with short-term oscillations within the climate. So if you think of something like La Nina, which has been in place for the last 3 years, has a big impact in this part of the world. But that doesn't necessarily mean that's the new norm, and that's what we're going to see going forward. So it's important to take that into consideration in any discussions, that climate change is a factor, but there are also short-term oscillations within the climate that we need to understand and consider as well.
The opportunity for clients over the coming 12 months would really be to look into product development or diversifying portfolios away from the traditional property lines, looking into the life and health space or the casualty area. Certainly in the casualty space in Asia, it's still very, very much a small part of the portfolio, and there could be opportunities to develop the products for the local environment.